What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. In the Weekly Watchlist, I do a technical analysis and give you some of my thoughts on the tickers here on the left. As always, we have the broad market comprised of SPY, the Qs, and IWM. After that, we look at the companies we always look at, which are Apple, Netflix, Tesla, Alibaba, Facebook, Nvidia, Microsoft, and Amazon. If you're interested in receiving 5 to 10 swing trade ideas, then head on into the first link in the description and sign up for my free swing trade newsletter. We're going to do a review on that when the new year comes. Just going to be a review of all the trades we've taken and what the P&L is. Also, we're on Instagram if you want to follow us at tradebrigade.co. We post a scan in the morning and some tidbit of technical information in the afternoon, so that's 2 posts a day. Also, if you want to talk to me and other traders in real time, chat during the market hours, then head on into the Discord chat. We'd love to see you in there. So starting off on our SPY weekly chart, as always, you can see that we did set a new all-time high this week, which we have marked in there. It's at 318.67. We broke out over this 2-week high, following this nice hanging man candle right off of our previous resistance, which we're now above, confirmed it as support, got the breakout. Things are looking good. Let's zoom into the daily. So although we do have a bit of an inverted hammer candle here on Friday's action, you can see that we did sort of break out of this balance that we've been having here. We do still have poor structure below us. There's still a tiny gap to be filled here, a gap to be filled here, and then even further back, there's a gap here in the chart, and then further back, we still have one final gap in this area. So there is still some poor structure below us that could be corrected and could potentially be some targets on any sort of big downward move. Again, those are just reference points. I'm not trying to insinuate that there's going to be any big market correction happening. I'd say that because we're in the second half of December just about with the holidays in full swing, I think the market continues to chug up in the bullish direction, although that's not what happened last year. That is what normally happens in the end of the year. So we're looking for a breakout and continuation over 318.67, in which case we're playing whole and half dollar resistance levels, as well as any prominent levels that form intraday. Any sort of pullback, we want to see this double top sort of area here at 315.46, our previous high before we got the breakout here. We want to see that hold as support. That would be a nice first target. However, if it gives, then this gap fill could potentially happen. You can see we got the partial gap fill here, but it completes the gap at 312.21 just about. So keep that in mind as support to the downside. Looking at the Qs, I do realize that in last week's video we talked about this hammer. This is just a misprint. Price never really did get down this low, so that's a correction on my part. Very similar to SPY, though, we do have a bit of an inverted hammer here. You can see we do have a little bit of a topping tail there. We'll mark in our new all-time high up there at 207.91. That will act as resistance on our way back up through it. Anything higher than that, like SPY, whole and half dollars into blue sky territory and intraday prominent levels. Again, we do want to see this area at 206.05 act as support since it is equivalent to our double top there in SPY. Anything lower, we're looking at 203.84. Wow. And then further down than that, you can see our triple bottom here and where this sort of hammer, faux hammer we'll call it, developed right around $201. So keep that level in mind as well if we do get down to it. There is still the gap here similar to SPY that could potentially be filled, but again, that's quite a ways away. And I think going into the end of the year, the markets will continue to be bullish and will continue to push higher, if not just consolidate. So IWM, although it didn't really break out much and Friday's action is a little bit concerning, it's not necessarily looking bad. You can see we're still in a very clear uptrend. We're putting in higher highs and still forming higher lows. We do have an area of support that I would call somewhere in here. I would just call it right around 162.30 just to play a nice number there. There's a gap still in the chart, which you can see here. We had a partial fill, but the complete fill, if we do get it, is to the high of this candle at 161.65. We do have this red inverted hammer, sort of doji-esque confusion candle, indecision candle here following our topping wick here. So our new high to contend with is at 165. Let's just call it a round number there. So any sort of breakdown below here, I would expect this gap to fill. If we get the breakout above, you can see if I scrunch up the chart, we are looking all the way up here at 169, just about 170 on any sort of major target to the upside. That comes into play based on very prior resistance. You can see all these touches in here, 1, 2, 3. So I would imagine that offers some resistance if we get back up to it. Again, this is the small cap sector, so money might be moving into the large caps, which are SPY and the Qs. So that's that might be why this one's lagging a bit behind. However, we're just here to play the chart. So if we get the breakout above, we're targeting that 170. If we get the breakdown below, we're looking for a gap fill. And then anything after that, really, and our levels are still mapped out for us. We have 161 whole dollar, 159.75 to act as support. Anything lower than that, and we're sort of looking at this dotted trend line that's developed, so we really do want to see that one hold. If you guys are enjoying the analysis so far, be sure to hit that thumbs up button. I genuinely would appreciate it, and I do think the YouTube algorithm would as well. Without further ado, let's get into Apple, our first company here. You can see we are putting in a new all-time high right after an announcement that I think that they had mentioned that sales in China were bad or something like that. So new all-time high. Even regardless of bad news, we're breaking out of this small consolidation zone that we had here. So nice to see that. We about doubled the range, so that's as expected. I think with this bullish bar here, we can continue to see some upside. However, that's a $1.50 resistances above us. If we do break down, though, we want to see our support zone here remain strong. That's at 267.82. Anything lower than that, and we're sort of coming back down to this level at 260.41, wouldn't be the end of the world, considering it's had a nice move up over the course of the last year, essentially. We do want to see the 50 SMA hold as a first touch support should the price get way down into that, but I don't think that's necessarily going to happen. And then, of course, we do have our dotted support rising trend line to keep in mind. Some of these levels aren't as important as they used to be, so keep them in mind, but they aren't necessarily going to be as strong as that 50 SMA rising, and I would say that this is the most important one that we do need to hold, 260.41, to maintain this uptrend and not put in a lower low. All right, sort of the opposite of what's been happening in Apple is Netflix. So we had this nice run up. We found some resistance up here as expected at one of our previous levels from back here. So no surprises there, getting the rollover, and we couldn't continue to put in a higher high. So we had a higher set of lows here compared to here, and now we're breaking down again, and we just formed another set of lower lows. So this to me is a bearish signal. I would sort of be looking to play this one short. Again, I've talked about it in the past. I'm not really a big fan of their fundamentals, so maybe if the price got back into here, it's worth trying a short play. So whether you want to short the stock outright or play some puts, that could be a potential trade idea. If the 50 SMA does break down and this support level here at 295 breaks down, I would consider our next one below at 282 a very key level. If we get back down there and that one gives, of course, we have 268.12. Any sort of move to the upside, again, we're looking for rejection off of this trend line, but if we get above it, 310 to 316 is that strong resistance zone. I wouldn't imagine price can get much higher than that. Tesla, the wild card, as I like to call it, we have a complete gap fill here now, so that's cool to see. This one is resolved. We do still have the glaring gap below us, so whether or not that fills, that's anyone's guess at this point. Our next point of resistance is just at the top of the chart here. You can see at 372.82. If we get up there, I would expect a first touch pullback off of that level, especially after this nice run up. You can see we're starting to see some indecision before we even get there at this sort of resistance level, right around 361. So whether or not we get a rejection or just sort of go sideways along here, that's completely fine. We are in a bullish environment considering what's been happening over the course of the last couple months. So I wouldn't really be playing a downside put play here. I would just be waiting for consolidation and then potentially another breakout. I would want to see some confirmation signs before, getting short on Tesla, playing some puts, and really expecting this thing to roll over. Alibaba is continuing to charge in the upwards direction, breaking out of the symmetrical triangle that we have been talking about for quite some time now. You can see that we are starting to put in a little bit of indecision like the rest of the market was on Friday. So that's no big deal, sort of just mirroring what the market's doing there. Our next resistance level and target is way up here at 211.73, so keep that in mind as resistance once we get up there. We do want to see this level at $200.71 hold as support. That is sort of where we ran into resistance. Once you get above resistance, any sort of back test should confirm or deny that it is support. If we get the confirmation, maybe there's a hammer candle around here, great place to go long and look for that target up here at 211.73. If we break down below it, supports are mapped out. We have 195, and then anything lower than that, which we really don't want to see, that would sort of ruin this uptrend, if you will, is at 188.10. So Facebook is finally falling out of its wedge here. You can see that it was playing really nicely, just coming up to resistance, back to support, back and forth, and we finally got the breakdown below this level here. You can see we had a couple days where we formed sort of this area of key support right here, right around $200.10. Once that broke here on Thursday, it was just bloodshed and a nice red day there. So if you caught puts on Thursday and Friday, congrats. Went right down to our support here at 195.09. So great to see that one holding. We are below it, and our 50 SMA is offering a tiny little bit of a bounce here. This one, if it got back down into the 200 SMA, I would consider adding some to the IRA portfolio. However, until then, I'm not really interested. I would continue to watch for some red action, maybe some consolidation after this intensity sort of cools off a little bit here. We're looking at 191 as support. If it consolidates right above that and then sort of goes sideways and then breaks down below, I would target that 200 SMA. Maybe some of these levels in here start to get important. Our first one being at 188.12 from this hammer here, and we can keep going down a little bit further, and we see another support just before our 179 level at 181. So keep those levels in mind on any sort of move further to the downside. NVIDIA has a nice pin bar here, pin bar, inverted hammer, whatever you want to call it, right at resistance after a nice extended move to the upside. So this to me would signal that we are due for some sort of pullback. We do have some decent red volume coming in compared to our previous green day, about equal sizes in candle and bigger volume on the red day. So interesting to note there. A pullback, I would like to see it come back down to somewhere mid-body of this green candle. I would break out the Fibonacci's and just play some intraday levels that might have formed if you look in the 30-minute chart, even the hour chart. Some levels I'm sure have been established in this big-bodied candle, so play those. If that breaks down, we are looking for our support to come into play at 211.39. Anything lower than that is at 206.33. Our 50 SMA is starting to catch up with that level, so that would be considered a super support. If we get any sort of continuation to the upside, you can see that we don't have anything really marked off. We're going to have to scrunch up the chart and see what we have in store. So nothing really here. This is all very emotional selling here where my cursor's at in the left. Our next sort of resistance point would be this double top that we had up here. And that's way up there at 248.94. So 249 just about, maybe even 250 if you want to play a nice round number. That's quite a ways away. I would just play intraday supports and resistances that establish themselves if we get the breakout to the upside. Microsoft's still setting new highs, which is cool to see. This one has just been doing that for quite a long time now. So 154.96 or 154.89 rather. Sorry, my line's a little bit off there. Is the new all-time high resistance that we're looking at. Any sort of pullback, we want to see this level hold as support at 152.58. If it gets worse than that, we are looking at the white dotted line. You can see it's sort of clung. I don't know what the right version of that word is, to that line in the past, and always continued to move up with it in the upwards direction. Anything lower, we do have a lot of lines on our chart. We could probably clean it up a bit, but I'd say the most key support, if we get lower than the white dotted trend line, is this one here at 148.58. You can see we have 3 touches here, another touch here, and then once we got above it, we confirmed it as support and continued in the upwards direction. So that's our key one on the downside. Anything lower than that, our next one I would call is this level in here at 144.88. That's quite a ways away to the downside. Again, if we break out to the upside, it's whole and half dollars into blue sky territories and any levels that form intraday. Amazon is just continuing to sort of chop around in its semi-bullish channel. It's not really ascending in the manner that I would consider a fully bullish channel, but we're getting there. Sort of just chopping around sideways for the majority of what's been going on here. So we are looking like we're getting a little bit of bounce off of our support trend line. We do have to clear that 50 SMA where the price is at currently to really see any sort of continuation to the upside, in which case, if we do see that continuation, first point of resistance is up here at 1812. Yep, that's up here at this high. Anything higher than that, we have our 200 SMA, and then our next double top tweezer top up here at 1824. And then really, if it gets higher than that, which who can say at this point, but our next point of resistance would be the upper end of our channel resistance, which is this white dotted line here. So if it does make a move, look for any of these levels. It could potentially get caught up somewhere in the middle here. You can see we do have resistance from the top of this tail here, which we had on Friday. This could potentially be a point of resistance here at 1788 based on where this candle sort of topped out. So keep all these levels in mind on the upside. On the downside, if we break down below our support white dotted trend line, we are looking at this level here. That's at 1707. Anything lower than that, we're looking at 1672. So that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed the video, leave it a thumbs up. As always, if you have any questions or general feedback for me, leave it down below in the comments section and subscribe to see more of this content. I'd love to see you in the live Discord chat so we can chat in real time about what's going on in the market, and I wish you a green trading week.